Do you want to start off with um, about yourself, talking about some of the main principles of your trading that really drive your strategy, and how you navigate the market on a day-to-day or week-to-week basis? And that's a loaded question, but
Yeah, so for me, I have a system that I like. I have a few things I want to do really well, and I want to do them really, really well. And that's my whole goal here. Like with the markets is to do that. I don't want to be a good trader when Levi jeans is going up and a good trader when growth is going up. I just want to be a good trader when growth is going up, and maybe, if growth expands its space into new areas of the market like AI and these things that have recently happened, then I will do that, right? The bigger approach is, just three edges, really, edges and entry tactics. What's my edge in the markets? If I have a really clear, defined edge that, hey, when I do this, I know I will see a return over a span of time. So that's the HB edge, right? So look for stocks that have made highest volume in a year, at stocks that have made the highest volume ever on the charts, and the stocks that have made the highest volume since last earnings. So those three volume signatures alone can make last year I took 13 trades all year. Eight of those 13 were the high volume edge, right? And what am I doing when I see that? I align it with market cycle. So is the S&P or the Qs, are they above the 21-day SMA or below? If they're above, the market's in an uptrend. Then the HV edge works a little bit better, right? I can size up and I can position size in those names, right? So that's like one like thing. It's very clear. I know what my edge is with that. I know exactly what I'm looking at daily. So I scan for high volume almost daily, look at those prints, look at the reason for the move, right? Why is that move happening? What's the rationale behind it? Maybe analyze the catalyst a little bit. But for me, like the weakness is I'm a technical trader, right? The more I analyze fundamentally, the worse I get because opinion creeps in. Then I think I'm now like some guy that can analyze and predict future trends and be like a almost like a fundamentalist all of a sudden. That's not me, right?
the next big analyst at Goldman Sachs.
So that's like one thing that I look at in the markets is the HV edge is the technical, it's proven, and there's a lot of like I could probably spend an hour just getting into like, hey, if the highest volume ever is into the $5 mark, right? For the first time in 1 to 2 years or more, like it's ever seen, or the first time it hits $5 and it's the highest volume ever. If you go and study just those stocks, you know for a fact that that five, like there's a high probability if it's part of a theme and it's the highest volume ever, and it's going into this $5 mark, right? It's going to go to 10, like AEHR, CELH. Like I'm just naming these previous names I've traded. It's the same pattern repeated on a different symbol, right? Again and again and again. And it just happens every year. It's very easy for me to just sit here and just look for those and make sure the market is good, the market aligns, and the edge is there. Like five. So that's where I talk about like whole numbers, right? When it's gapping up to into $5, or if it's gapping up to into $25, right? If it's the first time, if you look at PLTR, pull it up, look at how it made the move from $10 to 100. The first thing that it did was the highest volume edge into that mark. Then earnings came in, they started doing buybacks. There's like a lot of these other factors that come into play that drive the price action up, right? Institutional ownership is increasing, blah, blah, blah. But all of that for me is secondary. The first thing is that this is the highest volume ever. There's a reason there's volume in this name. I don't care if it's crowded. I don't care if it's NVIDIA's doubled, right? It's crowded. PLTR's doubled. It's super crowded. Spotify, like the most well-known companies that are the most liquid in the markets, Uber. Like I traded Uber from 30 to 60 last year when it gapped up on the highest volume. It had also had the first profitable quarter that it's ever seen on a quarterly, basis. That's another thing I, kind of look at from a fundamental perspective that is like, okay, if the company's starting to become profitable, plus it has the highest volume edge, I want to pay attention to this because that they can string together quarters of momentum from the fundamental side, which will bleed into the technical side, and which is already bled into the technical side with the highest volume. So that's highest volume. Just to like kind of summarize that, that's the first thing I look at. People call it episodic pivot, power earnings gap, high volume is what I call it, big volume, BGU, like everyone has a different flavor to it as to what they want to label it. But at the end of the day, we're all looking at kind of the same thing. I'm just a little bit more technical because I get more bullish when it's at 5, 7, 5, 10, 25, because I've gone in a little bit deeper into the woods of like the price action is driven better technically when it's around whole numbers in the markets. That's where like
That'll apply for essentially like are you talking about every $5 increments, or are you talking about specifically $5.00?
so like I'm talking about if a stock gets up into the $5 mark or the $10 mark for the first time, right? And it's the highest volume ever, right? Like take a Sharpie and like circle that name on your desk because you want to pay. Like I literally do that. Like I have a Sharpie on my desk. Like, hey, I want to this is the name that's gonna like allow me to position size. And the day two of that name, I'm like laser focused. Like, how do I get involved? Does it make sense to be involved? What are they doing? Like the what happened, basically. Um, etc. So that's where like that's my edge, right? And I'm super confident. Does it work out all the time? No, it doesn't. But if it's a pattern that's like if I do it over 30 trades, I'm gonna come out on top, right? That's the only mindset. So is there gonna be a year where all 30 times I maybe lose it and the edge goes away? That's when you reevaluate. But the probabilities of that happening and human emotion and markets and structure and all of these things changes with time, not doesn't change all of a sudden, right? So that's just one thing. The highest volume edge. Second is I'm looking at high tight flags. So high tight flags, scan for those stocks that move up 100% in 6 weeks uh, or less, 6 to 8 weeks or less. Then they build out these secondary entry areas through the high tide flag. So scan for those on a weekly basis. I'm screening for those. And then that is another way for me to get things into my focus list and into my radar as to what type of stocks I want to trade in the markets. Those are pretty simple. I mean, if you follow Leif, he's the master of high tide flags. We've done a few like webinars and podcasts on our YouTube, on the TraderLion YouTube that you can watch. He's the master of it. Like we literally partnered with him so I can learn better. So I'm just kidding. He's a great guy. Like he's really great. He's gone into the depths of that pattern. And you can get a lot of knowledge out of him and on how to like manage risk because those are high volatility names, right? Direction matters a little bit more. If something's moved up quite a bit, you want to keep your risk tight because they can, kind of fluctuate a lot. And then he's looking for those patterns within that flag. So
So
that's a
this
sec.
this is probably I want to dive deeper into some
Yeah.
of this because I would say the high tide flag is probably one of the more widely used concepts or strategies in I think a majority of at least the traders that I interact with. What would you say are maybe some like key characteristics to look for that you see either commonly mistaken or that you see stand out in order to kind of improve that probability or add another layer of probability to the high tide flag?
Yeah. So one thing that I am big on is like structural flags. So structural flags are different than like your normal bull flag or pennant and all these kind of terms. Structural meaning it bases around a whole number, right? So it bases around let's say the price goes from $25 to $50, right? Now we have a flag, but the whole flag is built above 40, for example, right?
Mhm.
For me, that's a sign that there's clear secondary accumulation happening in that particular stock. And the way funds operate, they don't sit there and say 42.25 is my Fibonacci. I'm going to accumulate at 0.53. and I'm gonna buy shares X amount. They're all whole numbers, like the way they speak, the way they talk, the way they operate in the markets. Like get me X amount at $20, get me X amount at 45, get me X amount at 180, right? So that kind of like if you speak to them, if you kind of research how the market setup structured, it's easy to manage as well, right? If I know that I have X amount of shares at 50 and I'm away from the desk, I don't have it at, like I don't need to get into decimals and things of that nature. So within the high tide flag pattern, structural flags have higher probability of going for that secondary run, right? That's the first thing I kind of look at when that flag is built. How shallow the height of that flag is, the better. So if it's building out where it pulls back in, let's say 10%, 12%, right? It's pulled back in and then it goes. Flags that are less than 15% in terms of like just the top and the bottom, if you measure that range, right? If that's less than 15% in nature, those succeed a lot more than if it were like you get a 150% run, you get a 45% drawdown, and then now you're just trading something whack. Like could be a meme stock, could be something that's making a live stream where someone's pumped it and things of that nature. So you got to weed out, the universe of high tech flags that you're looking at as well. So that's the second kind of the parameter to it. And then the third is thematic. Like, are there high tide flags in one space of the market? So cannabis, shippers, if you traded back in 2015, recently like semis in terms of AI space, right? They got pretty good. Silver miners kind of flagged out for a little bit there. Uh, Miners as a whole last year was like a huge theme. I think, and then a lot of people were just sitting there looking at like, I don't want to trade miner, but they became a theme and they were really successful as well.
One of the
Um,
best groups.
that's yeah. So that was the third. That's the third aspect. Like you need the market and the theme and the industry to kind of back up that move, and then secondary demand comes in, right? If people see, okay, now it's a good time. There's good risk management that I can, kind of have 3 to 5% risk here, place a trade and see if there's that secondary run that happens. I don't want, 5 to 10% risk on my, stuff. So those three, when you combine them, it will take your universe of like high tide flags that you're looking at. Will filter out the meme stocks, will filter out the garbage, and it will really get into a dialed in edge where now you have. And what I'm saying is what literally Leif says. Like
Yep.
he has model books and patterns and years of things saved just around high tide flags. I haven't gotten that detailed, but I've just picked up what he's, kind of taught everybody and uh, weaponized that in the market. So that's the second thing I look at is the high tech flag. The third is IPOs. So young stocks that build primary bases in the markets that build good patterns. And the second layer to it is they're part of a theme that's coming through, right? So day one of Figma, if you guys look at that chart, like I don't get involved in that type of trade because I think it's too fast for me. Like the pace of play, I can't control my risk as well, as that's how I feel. Some people do it. That's great, good for them. Like I just can't do it. I like to have control of my risk, and I like to feel comfortable in like what I'm operating or the things I'm operating in. But I look at IP like every weekend. I look at every stock that's IPO'd in the last 2 years, and I run through that list. And there's 179 nine of those in the last 1 year. So I run through that whole list, and that's the third way things can get into my focus list, basically. Um, and that's the system. Like I do some screening around NASDAQ 100. I run through those. I run through S&P 500 on a weekly basis just to see what areas of the markets are working, what areas are not working. I go through Russell 2000 just to give me a wider net. Like what are the small caps? Which ones? There's some good stocks that can come about that.
Did you say the Russell
Like
1000, the IW
2000.
to the
IWM.
whole 2000?
Yeah,
Okay. I
yeah,
know
the
some
two.
people will go through the IWO, the growth aspect, or some of the other Russell products, but okay.
Yeah, so I that's just for me to have general awareness of what's happening. in the markets really. Not really like I won't pick a particular biotech and trade it as a setup. When I started, I used to do that. I used to literally look for setups and not themes. And that setup game can is harder in my opinion, a lot harder, because then you have to be very good technically. Like you have to pick, you're trying to be an options trader in the equities game. I don't want to do that. I want to be the, I'm in equities. I want the theme to back me up. Just make it easy for me where if I get my average cost, the 21-day moving average to rise above my average cost, I'll just sit there and just relax and watch and track and things of that nature. So that's, NASDAQ 100, S&P 500, Russell 2000, just to see what the rest of the market is doing. We have some like visualizations, right, on Deepvue that make it easy, I would say, to kind of do that or catch themes in the market. But there's really nothing else to it. That's how I filter down my focus list, basically, and get to a list of stocks that I think will have like good potential. Um,
Hey, I have a question. It's
and
Bracco here. I have a question for you. Um,
yes,
so I know you took I mean, relative to other traders, a pretty small amount of trades last year. You mentioned like 11, 12 trades or whatever, and you put up a pretty decent return last year. I'm curious, are you pretty concentrated and aggressive with your position sizing?
yeah. So one of the like my focus, if I were to speak like 3 years ago, I used to like the 2020 markets, right? And if you guys go and just look at my X feed, I used to have 8 to 11 positions on because there was just so much like potential and everything's going up, every theme's going up in that post-COVID run. Um, and for me, it got to a point where like there's got to be, I would say a better way I can achieve the same return, just increase my position size rather than spreading myself thin across 11 names. And then I have to track those 11 names, right? And there's a Druckenmiller quote, like, put all your like eggs in one basket and watch it carefully. At the beginning of last year, I'm like, this is my goal. I know I've had 11 years in the market, 12 years in the market at that point. And I think I have a pretty good idea of which stock has better potential than another stock in the market. And I don't need to go buy 11 stocks to hope that one of them wins. I think I can pretty much narrow it down to three to four names that I feel will outperform any other name. That's just 11 years of work, 12 years of work happening to get to some level of confidence to say that or think like that. And that quote, like I think I saw this like scrolling and it kind of just clicked like, hey dude, I'm doing a lot of stuff that's not netting me the return that it should. Uh and that's when I narrowed down like, hey, I'm gonna position size aggressively, but I'm gonna not like recklessly basically. So when we got the turn, like when the turn happened, and the market went into an uptrend, Hood kept coming on my screens. The number of relative strength days when the market was pulling back, how it acted, and then over time, just like building that like confidence in that particular name, over a span of time, and then building position size into that, like right around that 45 area, right when it came back, like it built that little squarish box. Um, there. And when it did that, I'm like, this is the moment. Gotta size this thing up. I've seen this exact same pattern on Coupa software. I've seen exact same pattern on Square. I've seen the exact same pattern on OKTA in the software run in 2016. It all just like comes back and like years of visualization, hard work. Like it's just come out like, hey, you gotta pay attention to this. You gotta pay attention to this. And that converts into position size. I think a lot of people think that, it's not like we wake up and say we got a position size better and it's just gonna happen. Is that it's not gonna happen. Like there's a lot of when you have that one pullback day and you can't stomach it and you go from a 45 position that you have a 20% cushion on, and you don't want to give back that 20% gain, and you end up selling 3/4 of it because you're just too scared, right? That's what you have to kind of prepare for, right? That's I held this name through the whole run, like 40 to 150 plus, and I was just sitting there. I'm like, hey, it's above the 21, it's above the 10 for like 3 months. It was above the 10 day for 3 months. I'm like, I don't need to do anything. And then when it came into the 50 day, I added back. I think it was one touch of the 50 day. And leaders do the same thing. Like this was a leader in the markets. This was the best stock in that run that I felt, coming out. It started its relative strength phase on April 9 itself, and it never looked back. Like it was showing relative strength for like there's a cluster of days where it's showing relative strength, and it kept coming on my screens, kept coming. So that throughout those days, you build that conviction, and then your muscle memory and your image memory or whatever you guys want to call it kind of kicks in. Like, hey, I've seen this on Amazon as well. I've seen this on this name as well. I've seen pull up that same pattern, right? Kind of study that like you build your conviction over time. Then can you be wrong? Like that hood completely, fucking tips over and everything else goes up. Yes, it's entirely possible that happens. Then you play a little bit of catch up in the markets because you have secondary names you're looking at. That's fine. Will you perform as well? No, because you're going to miss that initial run. That's also fine. That's going to happen. But if you hit it, like if you hit the right one, it's going to literally make your life a lot easier. And that's what that name did pretty much.
Do you want to pull up a visual of some things?
Yeah. I can pull up hood.
My first question is, are you buying it all on 1 to 2 days within that flag post earnings in that 45 to 50 range, and then holding the entire position, adding more at the 50 SMA, or are there some minor trims, minor adds, etc. along the way in that 4-month period?
Yeah, so I'll walk through kind of the entire pattern and how I kind of see it. So basically, I have on my charts is the relative strength line, and then there's a moving average on that relative strength line of 21 days. So if a stock is outperforming, right, it will be above, so it will show green, so it's outperforming the markets on a 21-day basis. I want to be in those names because they're outperforming, right? And then the second thing I have is the market cycle. So is the market cycle basically is the S&P or the Qs, are they above the 21-day SMA or below? So in this period right here, they were below, right? The S&P was below the 21-day, and I'm tracking kind of this pattern out. So if you look at it in that correction pullback or whatever you guys want to call it, in that moment, hood started showing relative strength on April 9. It entered a relative strength phase on April 9. Like in corrections, what are we screening for? We're screening for relative strength. We're screening for stocks that are eager to go up, or we're screening for stocks that in the correction have outperformed the markets, right? And when you put growth on top of this as a story, the potential of the company, now you start to dial in that this guy is going to outperform the markets, plus has a good, growth story kind of happening behind the scenes. And this is where I start to track. Like this is, I'm not buying here. Can I buy here and buy here and then sell here and be very active? I can be. I have done that in the past, but there's just a lot of emotion and uncertainty because the market, this red background, the market is not above the 21-day yet, right? So when do I get conviction? One, I track the name, but when the market really gets going, which is right here, the market got green, this green background shows up. So now like I have relative strength. I have a name that's trying to outperform the markets. I have a name that when it tried to pull back, the volume was below average, right? Now you're combining different technical characteristics and how you view the markets. And then I really got involved in this area right here, which was right around earnings. The day of earnings, I remember it opened up and pulled, closed right near the lows. And then it didn't go any lower, right? Because there's a history of relative strength right here to back it up, this is where I built my position. Right around post earnings, this, and then round it out. When it gaps up and it gaps up above your entry, it's going to leave people behind. That's when you get even more bullish. And if you want to learn that from Oliver Kill. Like he gets mega bullish on gaps. Like if there's something that look, I drew a pivot. I don't know when I drew this. I drew a pivot and it gapped up above that pivot. There's nothing more bullish than that. Like early on when I started trading, I would always say, hey, this name is gone. I can't do anything about it. I did all my homework. I don't want to chase. I did all my homework. But dude, the market just went into an upcycle. This name started relative strength as the market was still below the 21-day. It was showing relative strength. It had lower or below average volume on its pullback. You were tracking it and you're doing all your homework right in this space, right? And when it's time to act, you're going to say that I can't chase a little bit. Like it has the ingredients to be a super winner, like in the markets. The float checks out, the story checks out, the relative strength checks out, the market cycles up. There's not much more you need at that point. So I built my entire position like this was the last day there and many days in here after earnings because there's earnings risk. I don't take that, but I do track, see what happens. The best thing you can have is a stock gaps up and closes at the lows of the day because that tells you the next day is far more key as to what happens. Next day, what are you expecting? A follow through to the downside in another red day. What happened? It didn't do that. Follow through to the downside, and you're expecting more follow through to the downside. Didn't happen. That's expectation breakers from Mike Webster. If you follow him, and he was kind of like the first person I learned a lot of stuff from the IPO side. So you're expecting the markets to come in and flush this name lower. It's not doing that. And it's breaking your expectations daily, right? And then it goes. So then it's easy. Like this part, the market's driving this action, right? The market's in an uptrend. The name already showed relative strength. It's above its 10-day. So, tag the 10-day, do nothing. So at this point, when the 21-day, this orange line that I have, when the 21-day goes above my average price, like which was right around May, right? I'm in the driver's seat at that point. Like I have no risk unless something crazy happens, which you can say for any name in the markets, like overnight. You can't control that. So I don't really want to pay attention to it. And that's not how I think, right? But if it happens, it happens. Like we've all caught, landmines in the markets. And, but above the 10, like your average cost and your 21 days is now above it. That's beautiful. Like that is how I operate. And this thing just took it, there. This is where I tend to take my first profits. So 2 closes when the stock has 2 days of, 2 closes below the 21-day. That's when that's the first time I will start to take it, let's say from a 40% to like, it's time to feel a little bit good about all the decision-making that you just did. And it's probably maybe, time for the stock to also base when it has 2 closes below 21. So it bases out. I looked good for a few days there, trying to reduce my position, right? And then it makes you look like a fool where it does this initial run. But, once I got about, 40% in this name. And then when it did this, 2 closes below, like every trade is going to end on like a very sour note, even though you're up like 160%. Those 2 days hurt. They sting a little bit. They don't feel good, but that's just the market. Like you just had a really good run and it's not going to all be, unless it's a parabolic run, right? Then you can sell it into strength. That's a different story. It didn't happen on here. So I reduced that and then kind of just didn't do anything really. I kind of looked at this as what the hell, shouldn't have reduced, shouldn't have done anything. Should leave alone. It happens to the best of us. Doesn't matter how much experience you have. Like the market always makes you come back in to the name that you already won on. I don't tend to do that unless there's a proper setup. It's like just a hard rule. There's like 4,000 stocks, and maybe I trade a universe of 20. There will be another one that comes around, and if this is gone and doubles and doubles and doubles, then so be it. I just need a proper setup. A proper storm to kind of brew together for me to get involved again. This one didn't kind of really do that. It just got wide and loose. If you look at the weekly, it kind of just, when the 10-week starts sloping flat, right? When the 10-week flattens out, that means you've done nothing for 10 weeks. And when you've done nothing for 10 weeks, it's time for a leader to turn into a loser, right? And this one turned into a loser because the relatives didn't outperform the markets. It's basing. This one's basing. Basically, this is the top of the prior base. It's going to fluctuate around this top of the prior base. I'm hoping there's a day where it comes in and really undercuts the top of this base. I think that day will be most interesting. If I were to like really get involved again, that would be kind of the area, because then I can, look at this. Those, if you look historically, like they'll come back into the prior base, flush it out, and have this aggressive bar, like this giant bar show up in terms of range. That's when you're like, okay, I think this is done basing. Time to look for a setup in this one again, right? At that point, but that's when we'll see if that happens. If it doesn't matter. There's other names in the markets that we can always trade. It doesn't have to be this one that you made a little bit of money on.
So a lot of that, around the early parts, maybe where the thesis was kind of developing, and throughout this trade, lined up a lot with the market cycles, and I'm curious as to how, my question isn't how much of a role does that play, but kind of how much of the role does that play? Compare that to somewhere like now, for example, to where if you saw a relative strength stock kind of behaving right now, or even last week, how do you kind of rank that, in comparison to some of the hood and Palantir moves of, May last year, in that regard? Does that make sense?
Yeah. So I like to, so if we look at the markets right now, so I have this market monitor dashboard that I set up. It's basically S&P, Qs, IWM, and the IWO that you mentioned earlier, like the growth portion. So what we're experiencing right now in the markets is choppy behavior, where we have about 7 days, give or take, everything's okay. Then that one day of like wax to the downside, and everything's not okay anymore. But what the S&P is doing is basically basing out. So to answer your questions, like after a correction, so when we have giant corrections, that's a 21-day down cycle, right? If you combine these two, it's 42 days of downtrend, basically, of brutal like sell-off, pullback in the markets. And if you look at market cycles historically, 40-day to, the worst one was 60 days, 64 days. Those are when the major turns come into play, right? When you get into that 40-day range, 60 is awesome. Like 60 days of just brutal selling, it's beautiful, because what will come out of it is a lot of potential and new themes and new, stocks that have built out really, really good bases, where relative strength becomes really, really clear, and you can spot it. You don't need to be, you can be average and do great. That means your probabilities of winning are going to be higher if you do a lot of homework, right? So for like those type of markets, that turn is what I'm trying to be involved in. Like that type of market is what I'm trying to be involved in. So this choppiness that we're seeing, where certain sectors in the market are working. So if you go to the year to date, so oil and gas is working, and the miners year to date. So we're in Feb, right? We're about a month and a half in. Whereas anything else is not really doing much, right? We have a portion of the market doing great, and that one portion just got whacked in a big way 2 weeks ago. And then we have a portion of the market just trying to figure it out, like software. It's a death wish right now, if you like with AI, Claude, Anthropic, and new models coming out. Everyone's gonna be jobless type of vibes. We're traders, so we will never be jobless. But that, this type of market that's gonna create frustration, is gonna create bases. It's going to be where one side of the market is working well, which is the small caps, the Russell, the growth, like that type of stuff is working well, you can operate in that, or you can just wait, right? And a lot of traders don't like to wait. That's just the reality of it. They want every month to be a money-making month. Mostly that's because when there is an uptrend, this uptrend was 68 days above the 21-day moving average. If you didn't make meaningful money in these 68 days, right? What were you doing? Because when there is a 42-day downtrend, this alone should make up a couple of years of what you should be, very comfortable with, right? If you have a really good process in the markets. So this is like the time to make money. This is the time to just watch people act like they know what's going to happen, whereas none of us know shit. Like Oliver says, nobody knows shit. And that's true because it's a choppy phase. There's a segment of the market. You have to be a really good stock picker, right? To time some of these names. And then I went from associating activity with progress to, activity with like actually just doing busy work. Like, what is the net return I'm going to get if I put all this money in the markets only to sell it 2 days later? It's not a good return. So I'll just wait it out, see how things are, and be very patient. It's hard. Like it's hard to do. It's very easy for me or for you to say it to people, but it's extremely hard. But it takes a couple of years. Like if you look at 2015 and 2010 and 2007, 8, and any type of market, like right around that time, those were all like choppy / downtrends in the market. And like those years, you just don't make any money. It's very hard. Like you have to work extremely hard. Like 2019 was when biotechs worked and nothing else worked in the markets. And we would just sit there every day trying to like push the envelope for a few percentages. I used to do that. Like I used to be hyperactive, 600-700 trades a year, if not more. And the returns were pretty much the same as when I just zoomed out market cycle themes, looking at industry rotation, operating when the market's above the 21-day. It made things a lot easier for me, and it has not just made my results a lot better at the same time. But so I don't know if I answered the question, but that's how I kind of look at things right now.
You answered it and more. So everyone's talking about your 13 trades. I think people hear that and are a combination of fascinated and maybe even confused. I think because it being kind of a foreign concept to most people looking for, like you kind of spoke about, activity and daily, weekly, monthly profit goals. So some of those 13 trades, so you talk about hood. I want to talk about two things. Is one of those were your worst ones? And if you could have had a 14th and a 15th trade, what would those have been? Meaning like what did you miss?
Yeah, so this I'll cover this one because it was frustrating. It actually was like 3 of my trades that like this snowflake, like this thing just it gaps up and it doesn't do anything, right? So I picked it up right about over here, right? It started out well. It was like a 10 to 12% gain. My whole kind of way of looking at this was I think this is going to go now. If you look at the bigger pattern, right? This is, in my opinion, I thought, this thing's going to go because it's trying to reach these highs over here, right? And if you're trying to reach these highs, it's very close to it. It has the highest volume in a year. It's had these highest volumes in the past, but not really done well or not done anything. But this is one that like just didn't work out. The nature of the stock was not good. The way it traded around even the 10-day wasn't really smooth. And it just frustrated the hell out of me. And then when this gap happened, I was out of the stock. Right now, it says 40 million in volume when it gaps up, and I'm like, oh shit. Okay, we'll try to do this again. That also didn't work out. So this Snowflake as a whole, it's one of those names like ServiceNow. This thing was in an uptrend for like 3 years, and I couldn't just trade it. I just couldn't trade it. It just, if you look at it like, hey, it's so easy. It's just there's a base, looks exactly like Shopify. It's a great stock. The market, it's outperforming the markets and all that. But if you look at the daily, that's my time frame. I operate on the daily and nothing else. I couldn't get into this thing. Whereas Ross, for example, he's looking at weekly and daily charts. And he's like, hey, this is great. It's above this, and he's making money on it. Whereas I couldn't make anything on this thing. So I think the character of the stock, this is one instance where in Snowflake, the character of the stock just doesn't match how I trade. I tried to trade it. I had a couple of losses on this. In terms of if I were to trade, if I had to place more trades last year, there were many names, but I just had such a good position in Hood, and I had a good start with that other name. What's the name of his nuclear company?
OKLO.
OKLO. Yeah, I had such a good start with that, and then the other ticker was the one that NVIDIA partnered with as well. So if you look at the beginning of this year, I traded this one pretty well into this. I traded this right here. I have it marked up. It was a 32% move right at the start of the year, the first week of the year. And I had this marked up. Market was in a downtrend because this was initial run, right? But that initial run started how? With the highest volume ever, right? If you look at it like this. So we have this little choppiness. Nobody knows about the company. Then we get the highest volume. And this highest volume was the highest volume since IPO. And when it's the highest volume since IPO, you pay attention. So I traded this name over here earlier in the year. And what makes this special? The fact that this is way more special than any other stock is that the gap up is happening at $7.50. That's, for me, is a whole number in the markets. If you go and look at every single high volume gap up over the last 15 years, you'll notice a pattern that when it's at 5, 7, 5, 10, 12, 5, 15, 17, 5, 20, they have a better probability of succeeding. Something special has happened in that price level as to it gets on more screens. I don't know. Something happens, but there's a consistency to that. So when this got into these $7.50, highest volume since IPO, Sharpie the hell out of this name because it's gonna do something special.
I'll say this quickly. A lot of custom scans or scan templates originally are set to filter out stocks below $5. That's what just one thing. I mean, that's very possibly part of it. Right?
It could be. I mean, whatever it is, but what I'm trying that whole number, concept. And I don't know if anybody has done it out there. I've seen an institutional trader once on X. I have it bookmarked, and he said, "Hey, we operate on whole numbers and whole numbers only." I'll probably find that and repost it today. But it just gave me more conviction. Hey, I'm seeing something around whole numbers. There's a consistency to it. And when I combine that with the highest volume ever IPO since last earnings, my probability and my win rate and my, how I make money in the market increases, quite a bit. So that just for me is an edge. So I just look for that. So when this happened, this is it. This is where I operate. This is where you're operating. So you got to track the hell out of this name. Give a really good entry. I had this initial trade from this area to this, and then it got wild, so I sold it. I don't like operating in something like this. This becomes like a lottery ticket, and I can't manage my risk. I can be static that this thing is up 28% in one day, but you also know over the years that that's unrealistic. right? It's very unrealistic that something's going to keep going up 28% every day and compound your capital at, 10 to 12% of your account every single day. That's not going to happen at all. So I sold it here, and then it had this secondary run, right? This whole pattern. This pattern reminds me of CELH pattern. If you look at CELH and its initial run and what it did, it had the same thing where it then built out around $14-15, this sideways thing, and I traded that as well. So that's how this trade came about at the beginning of the year, and I was off to a really solid run at that point. So
This was a little bit tough. So I can't remember exactly what day it was where we kind of broke out of that base. It was really early in the year, that big first up candle over the pivot, right there.
Yeah.
And then you push to new highs, and then you kind of stall a little bit, and then you got 4 or 5 days back down into the moving averages. 20 EMA, 20 SMA, 21 SMA, right? Same concept, right? And that's where it messed with me. So this was actually one of my biggest missed trades that I went over in my year-end review, because that little area of that it pulled back and kind of squatted, so to speak, it was shook me out and was never able to get back in that early January.
So I traded, this area right here, like this day, I traded that day. I sold it, all of it, and I missed this portion, by the way. Like this whole thing, I missed the secondary run on this. I watched the rest of the year. But the reason I sold it was something like Minervini or someone said, like, if you have a good January, right? And for the life of me, I would never expect something to move 25% in a day after I purchase it. And if it does, it's too good to be true, and I want to look for a reason to get the hell out. Like, it's like a lottery ticket, basically, right? So I had good size, and it did something I did not expect. And when the market kind of rewards you, it also takes back. You know that just through, just sitting here at the desk all day and look at, like, when it's too good to be true, it's probably too good to be true.
Look where we are in the market cycle too, up at the top of your screen, right? We all remember January, similar to now, kind of almost.
Yeah. So when that happened, I think it's like something Minervini said that, or someone, like, if you have a good January, it sets you up for the rest of the year where you're less stressed. You have a good return. Now you're kind of letting you dictate how you operate in the market rather than the market's pulling you in and then washing you out, spitting you out, and doing that again and again. So this was one of those where it set me up really well. And then the other one was the gap up. Stocks are slipping my mind because I've been
CRNC.
There we go. This one, I'll cover this one. You guys will see the edge on this one. Like, it's the same thing. I'm not doing anything different, but you guys will see exactly why I traded this. So you see a big green bar. That's the first thing, right? And that's 80 million. And why is this special? It's gapping up on the highest volume ever into the $5 mark. That's like the thing. Like, you gotta Sharpie that whole, situation. This is a special name, right? Did I catch this day? No, that's not the point. The point is there's an edge on the charts that's showing, and this I want to laser in on. I probably have a note that's turned black, but let's see what I would count. Whole number. So I mark it up with whole number, right? This is my $5 edge, 80 million, highest volume ever. I've seen this hundreds of times when I'm gone back in history. I want to have this name on my focus list. That's like the first step. If you get this on your focus list, you have some chance of shooting your shot at it that can lead to a really good result, right? If this is not on your focus list, you're never going to be aware of it. That means you don't have any edge, and you're just operating in some random environment that you feel like some weeks you'll make money, some years you won't. And a lot of traders just kind of end their trading at that. So this is where it got on my radar. So I tracked it. What made it special was this range, right around here. The market went below the 21-day on this name. So if I zoom in and really get into this, is where this was on my focus list now, because it's $5, highest volume ever. It has the whole number in it. Now the market's in a downtrend, or below the 21-day, not a downtrend. Let's just say below the 21-day. but the stock is showing relative strength. The stock is outperforming the markets while the market breaks. It tries to break out on December 23 was that day, and it got stuffed, but then it had in the wick actually for 2 days right there. And it was operating or trying to break out above $7.50. That's the next level I'm most interested in on how a name acts around that level. So I accumulated this position in anticipation that this thing's just going to trend slowly, not, there's nobody knows this NVIDIA news, what's going to happen, what's going to come out of it. No idea. It's just pure technicals. $5, highest volume ever. Track this name, get it on your focus list. It's outperforming the markets below the 21-day, right? You combine those things together. Now I'm positioning right here because I'm anticipating I can define my risk at the 21, right? I know that this thing's gonna even if it doesn't work, I'm willing to lose money on it at this point, right? Because it's such a clear edge in the markets, and then you wake up.
You were positioned before that news in that gap up. Holy crap! I bought the gap up in pre-market.
So, the reason I was positioned is because of that 5, the highest volume ever, the relative strength. It's showing me something around 7.5. It's trying to get above 7.5. It's getting stuffed, but that's because of the market. That's not because of the stock, right? It's because of the market. This red background. It's because of the market that this thing can't go, right? So it's showing relative strength. Like, it's showing me the signatures that I've seen. I know, like, I have a blueprint in my head of like what this can become, right? Now, if it does that, if it doesn't do that, that doesn't matter. It's like I can define my risk. I have a very defined risk on this thing. I can operate around 7.5, and I accumulated the hell out of this thing. 1 day before it gapped up, or 2 days before, I texted Ross and I texted Richard. We have a Discord like group, just us four. And I said, I want to put all my account in this thing. I still have that screenshot, like with timestamp. Like, I want to put my entire account into the name because I feel so incredibly, like, I've seen this before. It's all this like muscle memory kicking in. And then it gaps up the next day. I wake up to just text from Ross and Richard, and they're like, holy shit, it gaps up.
Yeah.
It's up X amount. Have you seen your account? I'm like, no, I haven't even seen my account yet. And it was up like 143% or 145% that day. I sold it the next day. Basically, I said, this is incredible. I have a giant position. It's too good to be true. I don't really even care what it does after that. Not a lot of thought, it's a blow off top. I knew this was going to do this at 28. None of that. It's just too good. I have my process. My expectation was like, maybe this happens over a span of 6 months, like this type of move. And when it happens overnight, then you take your money and you just say, great, I don't have to do anything for the rest of the year. So, for the most part. So
that is incredible. So I've seen you post about this as one of your trades, and it was really exciting because I bought the episodic pivot on the day that it gapped up. It was really cool. It was, again, a name that I was tracking as well because it was just giving nothing back. Like you talked about in your second principle at the beginning of this, of those high tide flags, what you want to see, right, is that minimal give back, and then comparing it to the market cycle and the health, like you talked about in your hood trade. And then the high volume edge, which you talked about in your first principle. I mean, there's so many of these concepts coming together for something like this is just really cool to see. And then not only that, to hear that you were not just seeing it on the gap up day where probably 99.9% of anyone and everyone else saw it, but you saw it prior to that secondary.
Like the patterns developing, the patterns developing, and something just happened in the markets, and the market rewarded your hard work. And the more you kind of just work hard over time, the more you'll get lucky. And that's just how it is with anything, not just trading, right? Like if you just work hard and if you have a process, if you really nail things down, and you see patterns in the market, like outside technical traders, where we're looking at patterns that repeat themselves and we're trying to exploit those with a good risk to reward ratio. And we're trying to do that again and again in the markets. That's really all we're doing, right? And you get better at pattern recognition and, current state, comparing it to some past state in the market. Like, hey, I've seen this, I feel this, I have a gut feeling like that you develop over time. The more charts that you see, the more gut feel that you will develop, the more conviction you'll get out of it, right? Because yeah, I've seen this. This clicks, all right? I've seen the situation. I've been in this situation. And the more like market cycles that you go through, the better you will get. As long as you try to spot those patterns, both in technically, but in your behavior, right? Am I getting greedy? Am I getting emotional? Am I getting desperate that the market's in a choppy thing? I haven't made money for a month and a half. Well, then when I say this to most traders, it sounds almost arrogant. It's like, what were you doing for the 68 days when we were in that trend? What were you doing? You weren't position sizing, or you were in 15 names with 5% position size that made no meaningful difference to your account. Or there's usually these problems. You're not position sizing, you're in too many names, and you don't have a market cycle system. So you're not aligning with the market's uptrend and downtrends, right?
Or too quick in and out too.
Yeah, or too quick in and out, right? If you focus on the leaders, you have a couple of edges, like I just said, like HV, high tech flag, IPOs, scan the market a little bit, look at the rotation themes, you just key in on that. It's more than good enough to do really, really well, right? So the biggest for me in the past 3 years has been I need to position side. Like I defined my edge for probably 11 years, right? 12 years of just refining to get to a place where I'm very confident. But then that confidence has to go into position size, or else it won't matter, right? If I place a 2% position on this name and sit there and I was happy that my 2% position was up 150%, your equity curve didn't go anywhere during that time, because the core issue is position size. Like when the market cycle is up, the environment's preparing itself for a rebound, right? When Trump is about to tweet that tariffs are on pause. Just kidding. That's not, I mean, that's like, it's not an edge, but like when you see that in the markets and you see the higher lows, like from a technical perspective and macros then confirming it, or Trump is tweeting it, then you got to act, right? Then that's really, it like repetition. It's not going to happen right away, or it's not going to happen. I would say, like, if you were to tell someone, right, they can see it, but if they internalize, they take it into their trading, they bring it in to their system, and they really feel, hey, I learned it. Like I say, I learned this from Mike Webster. I learned that from Oliver Hill. I learned this from Leif Serenity. I learned this when I had a conversation with Ross about this thing. I learned this when it clicked for me on a quote that I saw on X, like, hey, put, position size, right? So you pick things up along the way that make you a really good, that level you up, right, along the way. So like the way you trade is going to be very different than the way I trade. We'll have some similarities to it, but we can only communicate what we see. But it's, the magic is in internalizing what you see, like what you absorb as knowledge. You take that for yourself, and like you see that this is happening on the charts. And I sat there and I have like 400 or 500 charts of just whole number, high volume, and I have those marked up, like literally just again and again and again and again. It's like burnt into my brain. When I see these every year, like I was like, this should be the only thing I trade. Like everything else is almost noise, but that the frequency of these happening is a lot lower.
Yeah.
And they don't happen every day. So, yeah.
Maynard, I've asked a question about pyramiding into position within the base, typically, or looking at all specifically one entry point, or
yeah. So it's a really good question. I think let's dive into entry tactics, right? So that's what I just call entry tactics. How do I get involved in a name? Everything for me has boiled down to two things: numbers. So is it near 7.5, 10, 5? That's one way I will track the name, and then size my risk versus that whole number. So if a stock is at 8 and I'm operating versus 7.5, I'll go a couple percentages below 7.5 just to give it that room, right? That's one way. Second is moving averages. Relative to a moving average, where is it? Like relative to the 10-day, if I'm playing it off the 10-day, that could be an entry tactic. Like, hey, I see a lot of high tech flags that rip and then come to the 10-day, then bounce off of it. Then that could be an entry tactic. as well. So I operate around 110. So those are really the two, but I'm tracking the nature of the stock a lot more than, let's say, I draw a line at the top of this and I will only get involved if it gets above $9.29. I used to do that. That's how I started out. But now I'm like, I have an edge. Let me track, like, what is it doing on down days in the market? Which level is it holding when the market is pulling back in? And if it's holding the 7.5 level when the market's pulling back in, I can start to position size versus that, because now I know my risk, right? Versus that level. So it's I would say, like, it's not, I draw a trend line, I draw a straight line, I draw this. It's more based on edge. That's the first layer. Track the name, how it's acting. I love down days in the markets. Down days tell you more than any update will tell you ever. Like, if down days you're not doubling the amount of homework that you're doing, you're falling behind, because updates are like, everything's going up. It's easy, right? It's easy to pick something in that. But the true, like, information that the market's dishing out is the down days that happen, right? So those days I'm trying, like, that's where I'm strategizing. Like, how can I position size? How can I define my risk? And I'm operating at like 3-4% max. Like 4 is high for me. So it's more, you can say it's discretionary, but I think it's also technical. Like, it's very technical because you're tracking on down days. I want to see how the stock acts versus certain levels in the market on down days, and I'm operating versus levels. Mostly because the number of shares I'm buying now is much higher than it used to be. Whereas if you have a smaller account, then it's easier to do the straight line, trend line, get an alert, receive the alert, go buy it. Now, then define risk. Mine's turned more into, I want to manage this. I want to see how it acts on down days. I have a level in mind. And when I open my phone, I want to know if it's above that level or below that. And it's just that simple. Like, if it's above it, I'm fine. I don't need to do anything. If it's below it, it has to be 2 to 3% below that level. Then I get out of it. Now is not the time to get involved in this day. If it does run up without me, it does run up without me. That's okay. The system is built in a way that I have confidence that eventually I will get to something that will not, will make up for the minor losses along the way, but eventually result in a winner that makes up for all those losses as well. That's, again, repetition, iteration, just knowing. Sometimes you start to doubt yourself when the market is 62 days of downtrend and you're like, what the hell? I'm never going to make money again. Those are the times when sentiment's really poor, and usually when things turn around, right? But that, in terms of entry tactics, I hope I answered this question. I think when I used to educate, he used to be one of the subscribers, so I don't want to let him down.
He said bingo and absolutely as you were speaking. So
Okay.
I think you nailed it. Someone asked, are you based on $5 and 7.5? Are you tracking DRTS? It's a little biotech.
So I'll say so. So one thing, so that within the high volume edge and the signature, right, there's a lot of crap that comes with it.
Okay.
So you have to know, you have to differentiate from what can turn into a really, really good name. A beverage company that CELH, right? A beverage company that goes on an uptrend. Skechers shoes back in 2016. If you look at it, it's like a bottom left to top right chart of Skechers shoes. Who would have thought shoes would do that? But it started with high volume edge. Abercrombie and Fitch, ANF, you pull that up, that same thing, high volume edge, and then shrinks out. But those were also based on themes in the market, right? They were backed by consumers, retail, and these type of themes doing well. When it comes to biotech is new space. It's one FDA event away from doubling or nothing, basically, right? So I tend to steer away from anything that has to do with a FTA calendar or phase 1 trial, phase 3 trial. Fish oil is gonna make everybody magical again, look beautiful. Skincare brand that is now has phase 1 approved, but they need to get to 3 phases. I've been down that rabbit hole, right? None of that. It's all just extra information. I tend to avoid like these type of names. I want a company that has potential. Like if CELH can sell drinks, I've seen that work in the markets before with MNST. So there's potential there, right? It's not based on FDA, like the federal, approval board just wakes up one day and says that your drug is no good, gap up of 80% after the high volume edge, right? So it's like binary, very binary. Unless you have that knowledge, right? You're in the medical field or you have that technical. I know a lot of people that have really good knowledge in this space where they pick something at phase 1 trial that they know is going to be approved all the way and make it a consumer retail drug that just blows up and goes off the charts, right? And does really, really well. I'm not good at that. And nor will I be, even with AI. So that's just something I steer, clear of. So what I'm trying to say is when we scan for an edge, there's also nuances, like sub levels to it, where you learn over time that it's not as simple as I scan for high volume, I see $5, it all makes sense. I just buy it technically and do that. You also have to look at these like kind of sub level things that make up the potential or for that name to go crazy. So,
one thing that this is a personal question for me. So you are clearly very not only very skilled trader, but very skilled teacher and talker. So what I wanted to ask is, what do you think is most effective for traders to learn and grow aside from reps and work? Because I mean, actually we can probably get into the answer in reps and work, but what is, as a teacher and mentor, what are some very important things for students to learn?
So I think you have like the way I learned, I'll go through that and maybe there's a lesson or something. So when I started as a trader in trading oil, okay, USO and currencies. That's how I started, right? Trading NUGT and GDX, gold, like commodities. Like I started as a commodities trader. That's how I started. That I didn't see any success in that, right? Then I moved to equities plus options. Okay. I tried options. That didn't work out either for me. Like I went through that rabbit hole. As you have to be really, really good at timing the markets. You have to be spot on, right? Something's got to move. If you're gonna buy a monthly option or a 3-month out option, and that thing doesn't move, you get hit by decay. That's it. I've been there, done that. So then I did that. That was my second failure in a big way. Then I failed at within equities. I went through the rabbit hole of value names, and hey, this looks cheap. It's down 50% from the high. Now it has the company has a lot of value in it. It should go up, right? That didn't work out either. Then I got into growth, like met Ross. He kind of went through his methodology, then the whole Can Slim stuff. And that's after 4 different ways of like trying to make this work, this is the one that worked for me. Maybe, and every trader's different, right? Like I'm not gonna say, hey, only growth trading works, or I know people out there that are just doing dividend investing and probably they're making more than me, right? And they're just really good at it. Like they're literally just, they look at the stock, they have a keen eye of like what this company can become, and their dividends are growing, and they're just really good at it. So I think all of us are really good at something, right? My background is engineering. So I have a bachelor's and master's in electrical and software engineering. That's my background. I think in numbers. I look at numbers and I can spot patterns. That's my natural way of that's almost like I've done, you know, my university stuff that I did, my school, like everything led to me being an engineer. Like I used to be a PN, like a professional engineer, designated association, like I worked full time as well, all of it. But my lens of the market is very technical. I'm really good at it. So I think each of us have that, you know, something that we can exploit in the markets. Could be discretionary, right? Doesn't have to be technical or numbers. Could be fundamentals. Could be some people have a really good knack of like, hey, pay once, buy later is gonna become big, right? Or this is gonna become big, quantum is gonna become big or something, or drones are gonna go crazy. Like some people have that, like they have that lens on the market, and they're really good at it, and they exploit that, and they make a ton of money doing it. Like with the quantum companies when they blew up, I had a couple of friends that when they invested, I didn't even know about them, like these things, right? I didn't even know about like these things exist, these stocks. The stocks were in trash, like completely. Nobody cared about them for the longest period of time. I was like, hey, yeah, I bought this because I thought, you know, this thing's gonna be the next thing, and I'm willing to wait for 5 to 10 years, right? For it. So there's, I think what I'm trying to say is that all of us have a different strength, and we just have to exploit that. For me, it was technical trading. That's how I got to it. I think that's most important is your lifestyle, how you view the markets, how you trade, all have to align with how you trade. And you can't trade like, I can't trade like you, or I can't trade like Oliver, or I can't trade like these other people. I can learn from them, try it, fail at it, and then succeed as well. And when I do succeed, I know what I'm good at. And when I find what I'm good at, I do that again and again. I think that's like the base of, like, at least how I think about things when it comes to markets, is all of us are really good at something. Like Nick, for example, he's really good at just knowing, you know, trends that will develop. That's just he has a natural ability to do that, right? Richard is, again, an engineering mind. He's a mechanical engineer, his background. Now he's trading full time, but he looks at things very in an engineering way, or you know, of how he kind of looks at the market. Ross, he was mentored by William O'Neill, so he was big on, hey, companies have to have fundamentals, right, or else they don't get on my screen. Companies have to have these things. And Bill used to look for this. William O'Neill, same thing. William O'Neill used to look for this, that. So he's kind of approaching the market that way. So I think each of us just have to find that one thing. And the sooner you get to it, right, the sooner you can succeed. Sometimes it takes people like a very short span of time, like 2-3 years, and they're amazing. Like some of the traders that Richard's interviewed in the USIC, the podcast on the TraderLion side, they're just like, hey, I've been doing this for 2 years. I figured out what I want to do. And then you have like other traders like me, like, hey, after 12 years, I figured it out. Like I found something that worked out for me after like a decade of just, you know, being very, very average at this. So there's spectrums to it, right? And out there with social media and all these things, it's very easy for people to promise that it could be less than, you know, in 6 weeks, if you can learn everything that I know, and it's week 7, if you're not good as me, you're trash. I think that's like a personal, like, there's a lot of ego speaking when you say that in a way, and it all varies person to person, right, as well. So it's all personal to each of us. It's gonna vary. Like you could have picked things up a lot sooner than I have. I'm just slow, maybe. I'm not good at it. Whatever the case might be, as long as it works out, right? So, but I think it's important to know time frame varies. Time frame for success is gonna vary.
Know thyself. What do you think traders in their first 3 years should generally avoid?
Penny stocks. I did those. I think penny stocks, there's an edge there, but like really, maybe I'm just saying that because they don't work out for me. I think pick a strategy and see it through to failure. That's the best thing you can do, because then you can eliminate that. If you're in like one leg's in the pond and one leg's in the sand, like type of situation, you're just like going back and forth like that, you're never really gonna know what's gonna work out for you. So to this day, today, like I avoid biotechs. I don't trade biotechs. I don't trade mostly China, because there's talks of delisting now, and they're gonna overnight do something like all of that. I don't want to be involved in that. I don't want to be involved in value names. Something's down 90% off the highs, great. I don't care. Like, it doesn't matter to me. So I mostly like those things didn't work out for me to get to 52-week highs, all-time highs, high volume. If the general, like when I post some of these like high volume stuff that something's gapped up 30%, the comments that you will get is, hey, this is already up 30%. What are you doing? It's gone. Forget about it. Move on, right? But for me, that's an edge, because it's like it's up 30%, high volume. I know that if I track it, there could be a secondary sale and I could get another run out of it, right? So that's what I landed on. But I avoid biotechs because they're binary events. I don't go near currencies now. Don't go near commodities. Don't go near. I don't do even 3-time ETFs. That's another like billboards everywhere. You could get leverage X amount. I don't do that stuff anymore. I do core equities trading. That works for me. And I do, when the market's in a downtrend and I can feel a turn's coming, I buy S&P options. Long term, long dated, like no time frame to it. But I know like in a year, like it's unrealistic as to what's happening in the markets. And I can feel like, okay, there's enough relative strength setups, there's enough bases that are now formed that the market has enough potential to go and really go for it. That then, that's one of the trades that I also placed in that turn was the S&P. Like I bought SPY options like a year and a half out. And that also boosted my return, right? And I tend to do that because I feel like, okay, their bases in the market, there's enough setups in the market. It's a 40-day downtrend, 45-day downtrend. Things are looking favorable. Options premiums are like down a lot. It's a safer bet for me to go in. If it doesn't work out, yeah, I mean, it's not like 30% of my portfolio, 20% of my portfolio, but it's like 10% that makes a really good difference in my portfolio.
It's similar to sorry to interrupt. It's similar to Oliver Kell when we had him on at the end of last year. He talked about a futures position in NQ that he had put on in the middle-ish part of April, and he was riding it up until I think October or November when we talked to him.
I tried the futures side too. It was just a little too like, now I'm checking my phone after 8, checking my phone after when there's news. Now we're gonna get 24 hours of the stock market, which like I think is not great. Like I want to be on equal footing. At 9:30, I've prepared more than any other trader, and I'm gonna do well. Like I like the competitive side of like thinking of it like that, in a way a little bit. But this whole 24/7 stuff that's coming.
I want to talk about Deepvue for a bit here. I know we I've been speaking with Richard as well, and he's planning to come on sometime next week. I'm looking to finalize that and talk further about this. You're working like crazy, man, and you are just developing some of the coolest tools. And I know when we spoke on the phone, you said it feels like you're moving slow, but from the outside looking in, you're moving at hyper speed and doing things that no other platform are doing. And I just wondered if you wanted to speak to some of those tools and how you're integrating them into your daily workflows.
Yeah. So we built this platform about 3 years ago now. We started 3 years ago, and the goal of this platform was, me and Richard. I used to use TC2000. I used to use Thinkorswim, right? And then I also used to have Market Smith subscription. Now the bottleneck was that I need 3 subscriptions: TC2000 for screening, TradingView for charting, and Market Smith for fundamentals, right? And that's how we kind of started, like, hey, can we put something together that brings those 3 aspects in one place? That's how, like, the seed of the idea and why we started and what the purpose was. And we've been educating, like, back then I used to have a subscription. Richard used to be on the YouTube side, and we used to have like a TraderLion subscription, educating folks, kind of, what you're doing now. And that was a question we got like again and again and again, was, I need 3 subscriptions, I need 4 subscriptions to kind of manage. I need a journal separately. I need this separately. So that's why we built this platform in the first place. That's the whole reason, rationale, the vision of like where we're going and what's coming up in the platform is all based on, we want you to have 1 subscription, right? We want you to chart in this thing. We want you to scan for fundamentals in this thing. We want you to journal in this thing. And we don't want you to go anywhere else. You can have it on your phone, and you can have it on the web, and you can have a desktop app, which is coming soon. We just want you to be in one ecosystem like that we're building. So that's the whole rationale of building kind of this platform. Right now, like, we're making good progress. So we have a screening module that a lot of people like and use. We have a good watch list module, and we have a dashboard. We're building a lot of visualizations that are popular. So we have, performance chart, heat map, bubble chart, and all these. But some of the use cases that we have, like theme tracker. So we wanted to make it, we want to make it so that anyone can track themes in one place and make it really, really easy in one click, right? So we're building tools that we want to use. If I want to know what happened year to date in terms of themes, and I want to know which names, I have 2 clicks for me to literally have that information, rather than me going and scanning 50, 60, 70 stuff, like different ETFs, stocks, building a universe, this and that. So the second layer of this is, what we want to achieve is optimize workflows. We want to optimize all trading related workflows, and we want to bring them in one place. So a lot of the visualizations that we have, like market breadth, how are things looking today? Like, what's happening today? So this kind of tells you in like one shot, 46% of stocks are in stage 2, 41. So there's a split market, right? We're seeing that. We're seeing a split market. Today's momentum in the market is, how many stocks are up 4%. This is the Pradeep Bande metric. New highs, new lows. A lot of people tend to track that. If you have more new highs, generally it's a okay day, right? But we're building each of these visualizations to bring to optimize people's workflows. That's our biggest focus with this platform. And we want to do it all in a cost-effective way. Like, we're literally any subscription money that like we get out of this, we're 100% just, pick the shovel and burn it. Like, see what else we can what else we can do with it. And it's 100%, self-funded by the co-founders. It's all, we trade and we build this, and we just want to see what comes out of it, and if we can disrupt a few things along the way, that will be cool to do. But it's more of, I want traders to have this one platform both on their mobile and their web, where they can track their trading. In terms of what's coming up, journal module is coming up in early March. We're finishing that. We're going to introduce community in early mid-March as well. So that's going to be a way for folks to share their screens, their watch lists, their charts, their things with other people within Deepvue. And then the third aspect is, we've built our own charts from the ground up, from scratch. So right now we're using third-party charts, but we built a full like a ground up charting engine that it's our take on charts, basically, and what charts should be. So it will include pattern recognition, include one-click journaling. So if I am looking at a stock and I want to right click and I want to, make that chart part of my journal of like a model book that I'm building, right? For example, it'll be one click you can build, like as I'm navigating the markets and I see a pattern that I want to save for later and study it later, like there's a whole thing in charts that we can bring to like bring users workflows into charts, right? So how you study the markets, how you view the markets, how you screen, so you can go over bars and say, hey, find me this pattern, right? So that's like a ground up charting platform that we've been working on for a good part of like a year, I would say. It's so we want to match the capabilities of what's out there, but we have a lot of like things that we want to optimize. Like I don't want to screenshot uh things or save them as an image, then go to my OneNote, do that in
Yeah.
your OneNote, do this, or I like a tweet that someone made, right? So now like can I save that quickly? So we're working on like a Chrome plugin that fit right into X and
Cool.
will allow you to connect things to your journal. Like we want to bring all your trading and your, whatever it is related to your trading in one place. And I think that's going to happen for, in March, April is our goal to have journaling, to launch our charts and have our community kind of out there as well. So that includes all the bells and whistles like custom indicators, right? You can do that. We have a lot of AI kind of built in to our workflows as well. So like just me screening the other day, I was looking at FSLY. This is a
Yeah, I
recent
love
trade.
this.
You guys should be trading this. What makes it special? After this webinar, if you don't know what makes this special, you missed the whole thing. It's gapping up into 15 on the highest volume ever. So if you didn't Sharpie this and you haven't traded this into 15 and it's at 20, I think the high was like closer to 20 today.
I'd
Then
like the
this is
record to reflect that multiple people responded saying both of those things before you said
yeah.
it. So good job.
So
Good job.
if you got nothing out of this webinar, this is 15 to 20. It happens again and again. This is my second trade of the year. I've only placed 2 trades this year. So I won't say the first one.
The other one?
It's still yeah.
Okay.
Yeah. So FSLY is the second one. Like again, same pattern, same homework, same routine, and you just wait for it. It just falls on your lap, but because you've done so much, like if you do the homework, you get excited right here. Market's choppy, sure. Market's below 21 days, sure. But 15 and 100 million plus in volume, and in the AI space and growing, right? Sorry, I get excited about
And
some patterns, but
neglected and
and all these, yeah.
yeah.
So what we did, I mean, like I was looking at this and I wanted to let's just like put ask AI, like what happened to FSLY, right? So we put it like we're building the platform in a way where now you can like right click on any bar and you can literally ask what happened on that day. What was the story on the day? What was the context on that particular day? So what I'm trying to say is we're building a platform in a way that brings workflows together, and we're building it as we trade as well. We're trading daily. We have ideas. We bounce them kind of internally. We ask, our community as well of
Hey,
traders.
while you got this up, sorry to interrupt. Would it be possible to take that what happened to FSLY on 12/12?
Make it a note. Make it a
Yeah.
note. Yeah, it's coming. It's coming.
Perfect.
So
I figured as much. That's so cool.
yeah. So there will be like we have a copy, but there will be an option like yeah, that's it. Like we trade and we know what we want,
Yep.
like and we listen to the community. And that's the reason we built this. Like if I go and ask elsewhere, maybe in 3 months they will get back to me and say no, they can't do it yet. But I can do it myself, like, and I know hundreds of traders want it at the same time. So
Yeah.
that one is like it was a Monday thing, but it's Thursday, so now you know. So so yeah, yeah, you will be, and then the note will be anchored. And then when the note's anchored, when you hover over it, you'll see the same note as well. It will be embedded in the chart, and
Amazing.
that's a
Hey,
feature that we'll bring to our own charts, but will be available here as well.
I'm so excited. Manrev asked about speed of earnings data post report, stuff
Yeah,
like that.
yeah. So I spoken about this in the community webinar that we did. So we went out and we got like the best earnings data, and we paid a lot of money for it out of pocket, and it didn't work out. So now we built our own pipeline, basically. So we will source the data ourselves, parse the data, store the data, and by next earnings cycle, I guarantee you, in 3 seconds, earnings will be updated in Deepvue. You can take my word for it. So, like, we have our full end-to-end pipeline that was tested this earnings season. We benchmarked when the numbers were available. We benchmarked when we have it all parsed out and ready to insert into our database, and the end-to-end average is less than 3 seconds. So we're ready, but it was just one more earnings season. Like, we just gotta, it will be there, and it will be way faster and instant. And you will also be able to like set notifications on earnings. So
Just
the
about
global
that.
like you'll get a notification if you want to set an alert, like, hey, when earnings are out for this, just send me a notification that shows me what the earnings were. You'll be able to do that as well. Like, I just want this platform to be every workflow optimized while you're not paying $149 a month.
Yep.
That's not going to be the case ever. I want to make it so that it's available to every trader. Like, it's 49 bucks. And if you go annual, it's you save 2 months, so it's 390 a year. So, and yeah.
Yeah, and like I said, I keep seeing these micro we talked about this, these micro apps popping up everywhere on the internet right now, and yeah, I just keep coming to the same conclusion. Hey, Deepvue's doing this. They're doing it faster. They're doing it better. They're doing it all in one place. This
Yeah,
is good.
so I mean, I think it's good. I think we used to have folks on Excel, right?
Mm,
Building their Excel sheets. Now, with Claude and everything, you can do a lot of things relatively quickly, and more of like you're taking your Excel into a UI now, in a way, as to what your ideas were. I think it's a good thing. But what our focus is, if you're charting your watch list, your screener, your uh, rating systems that we've built, our dashboard, which has visualizations, and those visualizations I've seen copied over and over again, which is perfect. Like, I love that. But our focus is to bring your trading in one place. So when we have the journal, you're going to be able to, your charts will talk to your journal, your watch list will talk to your journal. They'll give you insights, like personal intelligence of your trading, that will make you a better trader. And we just want to make that in one place. And I'm hoping, a lot of people like that, value that. If not, then I still will use it. So I'm building something that I want. Like, we're all, the co-founders that are working at Deepvue, we're building something that we really, really would want to trade off of, and that's what we're doing. So um, there's a lot of like enthusiasm, support around that, and we're building so that we can just make our trading easier. Yes, there are going to be features that I never trade, like use, but that's more of like a business side of things. That's with
yeah,
any business. But most of the ideas are either from me, Ross, and Richard, and how we think of things and how we see things. So it's like kind of an aggregation of those in one place.
I love it,
Awesome.
man. I'm so excited. I guess, like I said, I didn't public tires, but I'm blown away, and just by hearing you talk about the things that are coming, just it makes me more excited. I can see people in the chat talking about. Looks like I'm canceling TradingView this year. Anyways, um, one brief section in this conversation about the current markets, and then we can recap. Aside from I mean, I suppose it's just kind of improving your process, your patience, your discipline, your routine, your structure, your decision making confidence. Other than that, what activity is necessary in a period like this?
I think keeping up with the rotation, I still do the same routine. Markets up, markets down, markets choppy, doesn't matter to me. I have a daily routine, like a list of 5 to 8 things that I do daily. Go over the liquidity scan, which is volume greater than 5 million. I just want to know what's happening, right? Uh, I look at the tight range scan, which uses the RMV system in Deepvue, which is like tight range stocks that are tightening. If there's a group of stocks that's tightening in one space, I kind of want to know that. And then I'm reviewing my positions and the HV scan, right? I'm doing those 4 things that I just stated. I mean, I'm doing those daily. I need to keep in tune with what the rotations are and how the market's doing, right? And that's not going to change, regardless of if we chop for a year or two, or downtrend for a year or two. Well, I've been through both of those, and what comes out of it is usually something that's really worth it, right? So you just consistency of those routines. Second, uh, is when I see edge. When you see edge and you don't have conviction, that means you haven't studied enough. So go study your edge. Have a clear, like if you can't say 1, 2, 3, like I did in the webinar today, that hey, these are 3 things I'm trading, and I'm really, really good at these 3 things, then you have work to do rather than look elsewhere and browse and go to X and scroll timelines and things of that nature. You have a lot of work to do, and go do that work so that you can get to that level, right? So in this market, I'm big, like I just picked this one, FSLY, like 100 million at $15, highest volume ever, AI theme. Go all in. Like just go. Like it's clear, right? Even if it doesn't work, there's an like this setup was day 2 in the wick. It doesn't get more powerful than this. Day 2 in the wick. Day 1, it had volume pre-market. The run rate, the story, like you said, the neglect, right? Like it's been sideways for a good part of the year. And that's pretty much, I placed this one. Probably should have taken a little bit of profit today because it was 15 to 20.
Sorry about
But
that. You can
we'll
blame us for the conversation.
we'll we'll see how it closes basically, and then make a decision. Yep.
Wonderful, Rai. Hey, I appreciate you for coming on, for taking your time, for your specific lessons, process, and analysis on the market and your past year and everything. Is there anything that final message you'd like to leave
No,
with
I
people?
think like just the only thing I would say is you know process routine is what I emphasize, and iteration. Those 3 things, when they come together, something magical will happen. Doesn't matter what kind of edge you find. Edge, in commodities, equities, currencies, 3 times, ETFs, poly market, anything. Trump tweets. There's always an edge, but as long as you do it consistently, that's when it clicked for me. And that's when things changed for me. When I saw things through to failure, but also success, that's when it happened. Not strategy hopping from one thing to another. I did that as well, where I was one week I was an expert in oil, the next was gold, the next is the Greece is defaulting. So now I'm an expert on that. Then Trump's taken out the Iranian leader. There's an edge in that. No, just one thing that when I did that one thing, things worked out for me. So it's just that's the only message I think I would have for traders.
I love it, man. Thank you very much. I'm for sure gonna go back and listen to this again, man. Enjoy the rest of your day. Best regards to your family, and I hope you have a phenomenal trading year. And I look forward to continuing to speak and develop a relationship together. Thank you.
Awesome. Yeah. Thanks so much. Thanks, guys. Thanks. Really appreciate the talk, and hopefully maybe later in the year I'll be back on.